Hello and welcome to today's stock market analysis, December 12th, 2023. Alright, here's a summary of today's analysis. Before we start, I'd like to just give you a disclaimer. Today's analysis is just an opinion of Stephen Look and is for educational purposes. And if you want more education and analysis, please go to my website, www.thestockmarketanalysis.com. And today, the market is actually in a consolidation move after a bullish move up. If you have seen how the market moved these past few weeks, well, it really went up really fast and a lot in these 2-3 weeks time. I believe now that the market is in a consolidation move, where it's trading sideways, and we want to wait for it to break out higher to perhaps have a bullish move up. We're going to look at the S&P 500 later, and the Dow Jones Industrial Average, and of course the Nasdaq Composite. We also have a look at the 3 different sectors: the XLK, which is the technology, the XLF, which are the financials, and XLY, which is the consumer discretionary. Then we'll have a look at some stocks like Netflix and Apple, which might be breaking out higher sooner. Later I'm going to show you the charts, and you'll probably understand it. And we're going to have a look at Google, Meta, and the SMH, which is the semiconductor sector, and we'll just have a look at one of the stocks in the semiconductor, which is Nvidia. Alright, let's go and take a look at the charts right now. Alright, the first stock chart we're going to look at is the US 500, the S&P 500 futures. As you can see, this is the S&P 500, and it has a very rapid rise around here, and now it's consolidating at this area. This is a support area, and it's consolidating it at this area. So this area here is actually a resistance area, and that's the reason why it's finding hard for the S&P 500 to go up. But right now, the S&P 500 is still quite healthy. The reason why is because it is still above the 20-period moving average. You can see right here where the market went up and is above the 20 moving average. It's still healthy. It's only the problem starts when the S&P 500 drops below the 20-period moving average. But right now, it's still above it. And yesterday, 2 trading days ago, we have a large green bar and then a red bar. But it's actually moving just sideways above the 20-period moving average. And actually, that's quite healthy. If we look at the hourly chart, you can see that it's actually consolidating sideways, moving up, down, moving up, down. So it's nothing really dangerous or nothing bullish at the moment, because it's just taking time for it to consolidate. And what I want to see is for it to consolidate a bit, trade sideways a bit, and then maybe when it meets the 20 MA, if it breaks out higher, we're going to probably see the market move a bit higher. Take a look at the weekly chart. Actually, it's quite conducive. You can see there's a resistance here, but maybe this area has helped to absorb some resistance here. And if it breaks out, there's a possibility that it can go higher up to 4,800. So it's a weekly chart of the S&P 500. Now we're going to look at the Dow Jones Industrial as well. Here's the Dow Jones Industrial. And look, it actually broke a downtrend line here. Okay, let me just choose this. Okay, downtrend line here. You can see it broke a downtrend line, and it went up higher. And just look at the pace of it going up. It's actually very, very rapid going up. So the fact that it didn't just collapse like this means that the market is actually quite bullish. But after such a nice long bull run in this short period of time, there should be some period of resting. And if it rests and trades sideways a bit, it's actually healthy for the market. And this is since this move up here has broken above this area, so this new area will be a support level around 35,500. So if the Dow trades anywhere above this area, I'm still bullish. And look at how the Dow is still trading above the 20 MA. So everything is still bullish right now. Okay, maybe just there may be a correction or sideways trading, but that's okay. And if we just look at this weekly chart for the moment, well, actually it's just trying to make a new high. Okay, so this resistance here, but I think the move up here maybe have absorbed a lot of resistance here. So the move up here, if it consolidates a bit, you know, there's a possibility of now making a new all-time high. Let's look at Nasdaq Composite now. Nasdaq Composite, and it's Nasdaq. Well, you can see that it's still trading above the 20 MA, so nothing really serious is happening. It's just that it's moving up and down a bit, but there's support level here. So as long as it stays above this level, 14,000, we're actually quite safe, and won't be surprised if it consolidates a while and trade higher. But we want to really be careful if it drops below this level. But so far nothing has happened yet. I just consider it trading sideways. Let's take a look at the technology sector. Tech sector, look, it has made a new high. This is the old high. It's actually broken up above here. So support level is around here and still above the 20 MA. So when I would say it's the Nasdaq, the technology sector is leading the markets. Whenever the tech sector is leading the markets, we should be bullish. It's actually good for the market when the tech leads. And we can see this rising 20 MA, rising 50 MA, rising 200 MA. So short term, still bullish, mid term bullish, long term bullish. So there is a possibility that it's gonna go higher from here. So if it drops below 20 MA, then you can see a correction down to here. But actually, it's still quite bullish at the moment. Still trading above the 20 MA. And so I don't want to jump too fast to any conclusion, but just treat it as a consolidation at the moment. 60-minute chart of the tech sector, gap down, broke below the 60-minute 50 MA, something I do not like to see. But as long as it doesn't drop below this level, 180.5, you can still consider it sideways trading. Let's take a look at the XLF. The XLF still not making any highs at the moment. You see the previous high was around here, went up, went down, went up, went down. So financial sectors are not doing quite well at the moment, although it has risen quite a lot, but it needs to find support around here, and hopefully it breaks up higher here in the future. It will be better if you focus on tech sectors rather than financial sectors at the moment. And this is consumer discretionary sector. Consumers discretionary trying to break a downtrend line. You can see obviously there's a consolidation here, still above the 20 MA, rising 20 MA. So if it continues to consolidate and break above the downtrend line, we could see discretionary moving up higher in the future. Now we looked at some individual stocks. Netflix not doing very well these few days. Gap up, rapid rise. No doubt due to some overbought indicator. But at this moment, it is at a correction. Okay, obviously seen that when it breaks below the 60-minute 50 MA, it's in a correction. Maybe it might find support around the 200 MA, the 60-minute 200 MA. So this is previous high. Support will be around here. So maybe if it drops to around here, you might want to see whether there is a bullish reversal. Personally, I would like to see it drop to the 50 MA and then see whether there's a bullish setup or not. Now, next one, Apple. This is really interesting because, yeah, I did write a piece on it this morning, and I was saying that, Apple consolidating, trading sideways, just slight declining, bottoming tails here at the 20 MA. This is actually a support area. I call this a consolidation as support here area, prior support. And what happens is if it breaks above this consolidation, there is a possibility that Apple is going to go higher from here. So how high can it go? We can take a measured move. This is a really positive target, bullish target. Take a measured move, and then we copy, clone. Okay, we can project a target up. Wow, it's real up. Okay, north of 200. Anyway, that is a very bullish target if you want to take this measure move target. But what I will think is that if it is able to continue to stay above this bottoming tail here, above the 20 MA, is really going to go above 200 soon. Rising 20 MA, rising 50 MA, rising 200 MA, all bullish pictures. Short-term bullish, mid-term bullish, long-term bullish. So Apple, good. Weekly charts also very healthy. Just broken out of kind of weekly wedge here. I don't know whether you can see it in your mind. Weekly wedge. So bullish in the weekly charts as well. Long-term rising. Really long-term outlook of Apple is still good. Let's take a look at Google. Google is actually trading sideways for a very long time. Since when is this? July, no, around here. Yeah, July onwards to here. So sideways trading, not much of a move, because there is a lot of supply here, a lot of resistance. Remember, a lot of people bought here, so that's why it's consolidating. Don't see any continuation pattern yet, but the rising 200 MA tells us that the long-term picture of Google is good. So it's trading like maybe a reverse head and shoulders. But if it will break higher here, we're gonna probably see Google making new highs, new all-time highs very soon. Meta, which is Facebook, interesting. Trading sideways, but the direction is moving up. The moving averages 200 MA, 50 MA is moving up, and you can see why it consolidated here. There's a lot of supply here. You know, all the way crashed down. From stage 4 downtrend, and then stage 1, and then stage 2 uptrend. So all these areas here, the congestion here is absorbing the supply here. Remember, people lost money here. That is why when the stock goes up, people who lost money here say, well, we'll sell it. So that's why it's a resistance. And because of that, that's why we see there's a lot of consolidation movement moving up, moving high. But at 50 MA here, I believe that it's still making higher highs and higher lows, higher low, low, higher highs, low, higher high, low, hopefully, and it's gonna go up soon. Semiconductors push a lot up past few weeks and broke above all these resistance areas, so declining a bit, but if it can stay above this area, 152 area, above the 50 MA, soon it's gonna correct to support and probably bounce back up. So 60-minute shows that it's still below the 50 MA. Not a good time to buy now. You want to buy it when it is above the 20 MA and 50 MA. So definitely we need a bit of time for the semiconductors to correct well, and then only enter. So sometimes you need to really know when to enter or when not to enter, but definitely now maybe not a good time unless it goes back above the 60-minute, 20 MA and 50 MA. The last stock we're gonna look at is the Nvidia. Nvidia is really good. Look, the gap up, rising 50 MA, rising 200 MA points to long-term health of the stock. Long-term, good. Long-term health of the stock. Consolidation, good. All-time high. This actually is not that far right now. 464 from the all-time high. When the stock is consolidating like this and the rising MA is here, it's going to meet it. Odds are of it going higher is quite good. So right now, sitting at the 50 MA. And what we can do is we look at the 60-minute chart, draw a trend line. Not a good time to buy now unless it trades back above the 20 MA, 50 MA and break above the 60-minute downtrend line. So if it does so, it's probably going to climb up like that. You can see in the past how it broke above the 60-minute trend line, went above the 20 MA, 50 MA and went back up. So short term, not a good time to buy now, but you might want to wait for it to move back up. So there you have it. We have gone through quite a lot of index and stocks, and do follow me if you find this helpful and interesting. Thank you and see you next time.